Tonight, while Washington's defense market frays under years of procurement chaos and trade shocks, a quietly audacious move from Ottawa has rewritten the playbook. Prime Minister Mark Carney just stood up a defense investment agency, backed by an $81 billion rearmament push and access to Europe's SAFE program, and Canadian firms are suddenly the bidders, the builders, and the beneficiaries. How did American dominance unravel so fast? If you want to understand how something as specialized and seemingly arcane as defense procurement could suddenly become the central pivot of the global industrial order, you have to first take a step back and look at the landscape beneath our feet, an economy that, after more than a decade of pandemic disruption, structural trade shifts, and geopolitical entropy, is no longer the stable, predictable ecosystem it once was. The worldwide economy today is not running hot, nor is it exactly in recession, but it's unsettled, uneven, and buffeted by forces that have little to do with traditional business cycles and everything to do with the political choices of governments. According to the latest United Nations forecast, global growth in 2026 is expected to slow to just 2.7%, a pace below the pre-pandemic norm and a stark reminder that we are living in a world where economic resilience is fragile and unevenly distributed. Reuters. It is in this context that a collapse, not of literal military power, but of confidence in the U.S. defense industrial complex, has become plausible. The United States remains, by far, the largest economy on Earth, with a projected GDP of roughly $31.8 trillion in 2026, dwarfing that of China and every other competitor. But even sheer size cannot immunize an economy from the consequences of rising tariffs, fractured global supply chains, and political whimsy that now dictate industrial policy in previously unthinkable ways. Visual capitalist. The Trump administration's trade and tariff strategy, the kind of America First economic nationalism that has sharply increased effective U.S. tariff rates, has reshaped global commerce. These barriers have generated uncertainty across markets and dampened investment flows. In fact, the International Monetary Fund warned that such trade frictions could shave off significant chunks of global growth by undermining confidence and interrupting the flows of goods and capital that underpin global supply networks. The Guardian. Domestically, the U.S. economy shows curious contradictions. Job growth is slowing, with just 50,000 jobs added in December 2025, the weakest monthly gain since the pandemic, even as unemployment edges down and wage growth holds up better than expected. Inflation, while lower than the turmoil of the early 2020s, remains above target in key sectors, and the Federal Reserve's rate decisions now hinge on fragile signs from labor, productivity, and consumer demand. Compounding these pressures is the fact that corporate investment, especially in long lead sectors like manufacturing and defense, has become increasingly tethered to political risk, regulatory unpredictability, and trade policy volatility. That, in turn, has profound implications for defense firms whose profitability depends on stable long-term contracts and predictable procurement pipelines. The Times. Meanwhile, Canada, a country with the world's 10th largest GDP in 2026, has begun to exploit these very disruptions. With a political leadership that combines deep expertise in markets and central banking, Prime Minister Mark Carney has framed his country's defense strategy not as an ancillary function of foreign policy but as a strategic economic engine. Carney's government has moved decisively to modernize a procurement system long criticized for inefficiency and delay, centralizing it under a new defense investment agency designed to streamline decision-making, eliminate bureaucratic red tape, and attract both domestic and international partners to Canadian manufacturing and innovation. Visual capitalist. Reddit. This is not a trivial shuffle of administrative desks. Canada's pivot has been driven by more than just strategic sovereignty, though that is a part of it. It has been driven by the recognition that defense production today is not merely about guns and jets, it's about high-value industrial capacity, supply chain integration, and economic clout. This is where defense intersects with employment, GDP growth, and technological leadership. A report from the Canadian Imperial Bank of Commerce estimated that Canada's planned defense investments, a $31 billion boost through 2029, could generate up to $64 billion in economic output, infusing labor markets and supplier networks with fresh demand. Reddit. Look at the broader economic picture and you'll see why this matters. Global inflation, while easing, remains volatile in many regions. Unemployment has plateaued at structurally higher levels in some advanced economies, and growth forecasts, even optimistic ones, sit below the rates that sustained middle-class wage gains in previous decades. The IMF's World Economic Outlook indicates a world economy that is resilient yet subdued, with both advanced and emerging markets grappling with slow investment, fiscal constraints, and trade uncertainty. Capital Group NACG. In such a world, sectors once considered peripheral suddenly become central. Defense, traditionally the preserve of national budgets and geopolitical posturing, now functions as a test case for how well advanced economies can adapt industrial policy to contemporary global stressors. Canada's move to centralize defense procurement is a response to a U.S. system that has grown dysfunctional, beset by contradictory tariff policies, political interference in markets, and a regulatory environment that sends conflicting signals to investors. It's also a response to geopolitical tensions that have crept into unexpected places, from the Arctic, where Canadian officials are increasingly nervous about U.S. assertiveness, to the broader NATO alliance where defense spending commitments have been recalibrated upward in response to global risk. Financial Times +1. The global economy today is a world where tariffs can ripple through manufacturing hubs, where inflation expectations influence central bank decisions, and where defense procurement, once a predictable element of the industrial ecosystem, can be disrupted by geopolitical fissures. And it is within this landscape that the collapse of the U.S. defense sector's traditional dominance is not just conceivable but observable. Firms once assured of long-term American contracts are now watching Canadian bids beat them on pricing, agility, and policy support. Allies once dependent on U.S. manufacturing are turning to alternative partners who are offering not just production capacity, but certainty. That certainty, predictable procurement, streamlined investment channels, and long-term industrial planning, is the very thing that markets crave in a time of economic flux. Inflation may be trending lower globally, and unemployment may be holding steady in many advanced economies, but manufacturing investment demands foresight. It demands confidence. And at a time when trade wars, Federal Reserve policy uncertainties, and political brinkmanship in Washington have sown doubt, Canada's assertive strategy is attracting attention far beyond its borders. If the first part made clear that an old industrial order, the U.S. dominant defense procurement machine, was being tested by political choices and economic dislocations, the second part must grapple with what it means in real terms for people, governments, businesses, and the geo-economic landscape of the decades to come. Because this is no niche technical issue, when the procurement process of the world's largest military economy begins to falter, the ripples extend far beyond lockers and arsenals. We're talking about jobs, investment, global trade relationships, fiscal sustainability, and even the very capacity of states to project power in an era defined by systemic uncertainty. In the short term, the economic effects are immediate and measurable. Defense spending, in most advanced economies, is no longer a static line item but a dynamic lever of macroeconomic activity. In the United States, the 2027 defense budget proposal, a staggering $1.5 trillion over the next year alone, stands to widen federal deficits significantly, according to analysts at Moody's. That's money the government plans to spend, but not without cost. The increase would likely exceed the revenue upside it could generate through growth effects, meaning more debt on the books and less fiscal flexibility for other priorities like infrastructure or social spending. Reuters. For individuals working in sectors tied closely to defense, manufacturing, engineering, technology, logistics, the immediate picture in the U.S. is a mixed one. On one hand, the Department of Defense continues to be a major source of employment and innovation, with defense-related industries accounting for approximately 3.3% of U.S. GDP in 2026 and supporting growth in high-skill jobs. On the other hand, production bottlenecks in critical systems such as submarines or aircraft have dampened capacity expansion that would normally bring more workers into higher-paying positions and create upstream demand in the supply chain. Those bottlenecks, in part, reflect the broader policy uncertainty and the trade tensions unleashed by renewed tariff strategies under the Trump administration, which economists warn are creating employment losses and export declines in interconnected industries, not just defense. One academic study published in December 2025 found that tariff escalations can generate global job losses exceeding 23 million in the most adverse scenarios, disproportionately hitting low-skill and informal workers. Jobs with DOD. Jobs with DOD. Archive. Contrast that with Canada, where the emergence of the Defence Investment Agency, a centralized procurement body launched by Prime Minister Mark Carney, represents a deliberate attempt to turn defense spending into a vehicle for economic revitalization. Carney's government has pledged to grow Canadian defense spending enough to meet NATO's 2% of GDP target in 2026, and, far more ambitiously, to progress toward a 5% of GDP defense investment pledge by 2035, aligning with broader NATO commitments agreed at the 2025 Hague Summit. The Defense Investment Agency is designed not only to accelerate procurement but also to integrate industrial policy targets, create high-paying jobs, nudge investment into advanced manufacturing, and reduce dependency on imported equipment, particularly from the U.S., which accounts for as much as 75% of Canadian defense procurement today. Wikipedia. Invest. What this means in human terms is significant. Canada's defense industrial base, historically modest compared to that of the U.S., already contributes nearly $10 billion to Canadian GDP and supports over 81,000 jobs across the country, including a large number in small and medium enterprises. Under past procurement systems, much of this base sat underutilized, or worse, at risk of losing market share to foreign suppliers. With the DIA consolidating procurement decisions and streamlining processes, removing duplicative approvals and accelerating timelines, the expectation is that this base will expand because certainty attracts investment. Canada. Prime Minister Canada. The medium-term effects on business confidence and capital markets could be transformative. A report from the Canadian Imperial Bank of Commerce estimated that Canada's planned defense spending boost, $31 billion through 2029, could generate up to $64 billion in economic output, broadening supply chains and deepening industrial capacity. Investors look for predictable revenue streams. Defense contracts, typically long-term and large-scale, can provide exactly that, if the procurement system functions at speed. For Canadian firms, particularly those in aerospace, shipbuilding, and advanced technologies, this creates the kind of horizon for R&D investment that has historically eluded them. Reddit. For the U.S., the trend has been almost the inverse. Procurement delays, bureaucratic fragmentation, and political uncertainty have combined to elevate costs and lengthen timelines. A policy analysis found that between 2017 and 2022, about $12 billion in Canadian procurement spending lapsed or was reprofiled due to delays, highlighting how procurement dysfunction can directly suppress economic output that would have otherwise been realized in industry. These kinds of inefficiencies also have a direct impact on retention and morale within military ranks. Aging equipment unavailable for training or deployment can trickle into readiness shortfalls that, paradoxically, make defense spending less effective as a strategic tool. Policy options. In trade terms, the Canadian pivot is already reshaping supply chains and international alignments. Frustration with U.S. trade posture has led Ottawa to seek defense partnerships in Europe, diversify its procurement away from American suppliers, and even review its long-standing F-35 fighter jet order with Lockheed Martin, moves that underline a broader strategy of economic sovereignty and security matters. The Defense News report from 2025 described a strategic retooling of weapons sourcing that would reduce over-reliance on U.S. systems, a shift that earlier Canadian governments had been reluctant to embrace. This kind of realignment carries significant downstream effects. European defense firms stand to gain access to Canadian contracts that might previously have defaulted to U.S. incumbents, and cross-Atlantic industrial integration could strengthen alliances that compete with American industry dominance. Defense News. Defense News. In the long term, the macroeconomic picture depends on a few variable trends. Defense spending is, by nature, cyclical and politically contentious. If NATO's elevated spending commitment persists, pushing members toward 3.5% or even 5% of GDP on defense and related security infrastructure, then defense markets worldwide will expand, absorbing capital and labor and arguably boosting GDP growth across allied economies. Indeed, macroeconomic models from the European Commission's Spring 2025 economic forecast show that increasing defense spending by up to 1.5% of GDP could lift real GDP by 0.5% above baseline by 2028, even if public debt rises modestly. The icebreaker.ca. Economy and finance. But these long-term gains come with structural trade-offs. Higher defense outlays often compete with other public needs, infrastructure, social services, climate adaptation, and can crowd out private investment if financed through taxes rather than prudent borrowing or efficiency gains. There's also an environmental cost. Academic studies have shown that militarization can increase emissions and slow the clean energy transition, at times crowding out renewable investments. This is an issue policymakers must balance. Defense capacity is critical in a fractious world, but a sustainable economic strategy should not undermine broader societal goals. Archive. For individuals, the story is two-sided. In Canada, workers in manufacturing and technology sectors may find a surge in demand for skilled labor as defense contracts proliferate. This can translate into wage gains and lower unemployment in regions where industrial bases have languished. In the United States, the defense industrial workforce might see job growth in specialized areas, aerospace, naval shipbuilding, missile systems, but only if procurement bottlenecks are resolved and supply chains are unfrozen. The net effect for workers overall will depend on policy choices, whether governments prioritize domestic content in procurement, invest in workforce training, and mitigate displacement effects in sectors negatively impacted by trade tensions. Jobs with DOD. On the government side, the implications are complex and fiscal. For the U.S., expanding defense spending in the absence of offsetting revenues means larger deficits and less room to maneuver on economic priorities. For Canada, ramping up spending to meet NATO targets requires careful fiscal calibration. Too aggressive a path risks crowding out other investments, but too timid a one risks missed industrial opportunities. Economists at Desjardins, one of Canada's major financial institutions, argue that if increased defense spending is done right, it could be a strategic leap for the Canadian economy, helping it overcome productivity bottlenecks that have depressed growth for years. Desjardins.com. Internationally, the reshaping of defense procurement will reverberate through global trade. New alliances and supply chains, such as Canadian ties with European defense markets, could rebalance trade flows and reduce some of the distortions created by recent tariff escalation under U.S. policy. But the deeper structural trend is clear. Nations are increasingly viewing defense not just as a national security concern but as economic infrastructure. Partnerships, joint procurement frameworks, and standardized systems mean that defense markets will be a battleground of both geopolitical and economic competition. The multilateral NATO pledge itself, to boost spending to 5% of GDP by 2035, signals an alliance mindful of strategic autonomy and collective industrial capability. Wikipedia. Looking ahead, experts are already offering predictions and policy recommendations rooted in these trends. Defense economists stress that for the U.S., the solution is not simply higher spending, but reform of procurement processes, investment in workforce development, and recalibration of trade policy to reduce uncertainty that dampens investment. For Canada, the success of the Defence Investment Agency will hinge on talent acquisition, institutional capacity, and the ability to link defense procurement with industrial strategy, a task easier said than done given decades of bureaucratic inertia and the technical complexity of defense prohay.